This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending March 12th, 2022. Our question this week is, what is a stock split? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.69% on Friday and was down minus 1.99% for the week. The S&P 500 decreased minus 1.3% on Friday and was down minus 2.88% for the week. The Nasdaq decreased minus 2.18% on Friday and was down minus 3.53% for the week. Looking at the week, we can see that there were 3 up finishes versus 12 down finishes for the major indexes. On Monday and Tuesday, all 3 major indexes finished down. On Wednesday, they all finished up. And on Thursday and Friday, they all finished down again. The new unemployment claims were 227,000 versus 217,000 expected. Job openings held above 11 million. The national average for a gallon of gas topped $4. U.S. oil spiked to a 13-year high of $130. It was reported that inflation rose 7.9% in February. Amazon stock rose more than 5% on a 20-for-1 stock split. And the U.S. Senate passed a $14 billion funding bill. New unemployment claims, the number of job openings, the national average for a gallon of gas, the price of oil spiking to a 13-year high, the reported rate of inflation, Amazon stock splits, and the Senate passing a funding bill are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a stock split? A stock split is when a company divides or splits each share of outstanding stock, thereby increasing the total number of shares outstanding. For example, a 2-for-1 stock split means that for every 1 share of stock outstanding, the corporation will issue 2 shares. Thus, if you held 100 shares of a stock that splits 2 for 1, you will have 200 shares after the split. When stock split, the value of each share is affected, but not the total value of the shares outstanding. For example, if your 100 shares were worth $10 per share for a total of $1,000, that is 100 times 10, after the stock split, each share would be worth $5 per share, but the total value would still be $1,000, that is 200 times $5 per share. Even though the total value of your shares does not change in theory, after a stock split announcement, the market will generally move the shares higher. For example, Amazon announced a stock split of 20-to-1. That is, for every 1 share of Amazon stock, there will be 20 shares. Thus, if you own 10 shares of Amazon on Wednesday, when Amazon closed at $2,785.58, on Thursday, after the stock split announcement, Amazon closed at $2,936.35. You would have gained 5.41% just on the announcement. And that's on a day when the market itself decreased by 0.43%. However, please be aware that the actual stock split usually comes a few weeks after the stock split announcement. So Wednesday you own 10 shares, and on Thursday you would still own 10 shares. You would not get your 20 shares until 2 or 3 weeks later. Some investors and traders buy stocks that have stock split announcements because they believe that the market is going to drive the price of the stock up. More people are likely to buy more cheaply priced shares than more expensively priced shares. For example, when you look at Amazon, it hovered close to $3,000 a share. After the stock split, a $3,000 price turns to a $150 per share price, as in 3,000 divided by 20. Thus, $150 per share sounds a lot less expensive than $3,000 per share. More people are likely to buy Amazon because of the stock split, putting a higher demand on the shares. Do you buy stocks that announce stock splits? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, on purpose, it was not taught to you in school. However, you are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be a critical thinker, nor did they teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list for the week ending March 12, 2022. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was CrowdStrike Holdings Incorporated, ticker symbol CRWD. In the second column, it increased 6.43% for the week, but it was down minus 0.25% on Friday. CrowdStrike provides cloud-delivered endpoint and cloud workload protection solutions in the United States and internationally. CrowdStrike offers various cloud modules on its Falcon platform via a SaaS model that covers various security markets, including corporate endpoint security, cloud security, managed security services, security and IT operations, threat intelligence, identity protection, and log management. Looking at a summary of results, you can see that CrowdStrike has actually decreased almost 7% year to date. I did not trade CrowdStrike this week, but I have traded it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 Index ETF SPY? Let me know in the comment section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 Index ETF SPY so far in 2022. The Southside portfolio is down minus 23.04% versus minus 11.56% down for SPY, a difference of 11.48%. The Southside is losing to SPY by almost 11.5%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin continues to be in a bear market. Will it bounce back in 2022? Stay tuned to find out what happens to Bitcoin and subsequently the Southside portfolio, because we will remain heavily invested in Bitcoin. The portfolio is 83.64% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 10.63% of the portfolio. Cash is 5.73%. The cash flow generated for this week was 0.77% of the portfolio account value. The account value changed by minus 1.58%. Meanwhile, the S&P 500 ETF SPY changed by minus 2.8%. I sold option contracts on two positions this week. They were both calls that range from $212.05 to $331.40. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.